We've got Stephen now. Stephen, thank you very much for joining us. Stephen Zaccone of Citi. Sorry about the glitch there. Tell us what attracts you to Ollie's Bargain, please.
Yeah, sure. Thanks for having me on, Andy. Ollies is an attractive growth story in retail. You've got this near-term opportunity, right, with tariff disruption. Do we have tariffs on? Then we have significantly reduced tariffs. The boats were held at ports out in Asia. Now they're kind of flowing across the Pacific. This is a real significant opportunity to see attractive merchandise flow to Ollie. So that's one thing in the near term that's really attractive them. The other is, the long-term trend in retail has been bankruptcies, right? And retail closures of brick and mortar stores as online players take more and more market share. Ollie's has been a real beneficiary of that because you're seeing more and more dollars go towards the value and kind of off-price arena in retail. And Ollie's one that benefits not necessarily from apparel, but more so from closeout of consumer products and seasonal items. That's really where they've picked up a lot of market share, especially in the near term with the bankruptcies of like a Big Lots or a Party City. So they've been a big share gainer in retail.
Your next idea is Chewy. Now, you say there has been a 2-year decline in active customers, but that's been arrested now?
Yeah, I think, Chewy's an attractive area within pet because you kind of appeal to the younger demographic, a little bit more of the millennial and like the urban household where we're seeing some trends come back after rural was very strong during the pandemic. Their e-com play, right? Most of the business is consumable. So the beauty of that business model is you've got auto ship, which is about 75 to 80% of the business. So you or me, we sign up for, dog food for our animal. We kind of get that repeat delivery every 4 to 6 weeks. It's a very sticky business. The appeal now is the pet category is starting to get better pet adoption trends. You're probably going to get more pricing inflation, right, as we see some grocery prices go up over the near term from tariffs and just general better economic activity. That's a positive for their business. I think what's also attractive about Chewy is you've got a EBITDA margin expansion story that's largely within their control. They have a bigger health and wellness business, so that's like pharmacy and vet clinics. They're driving more automated fulfillment centers, which is really savings on labor. So I think they're another attractive one that we like.
And finally, AutoZone, AZO. I imagine if there is a recession, people will hang on to their cars longer and will have to fix them.
Yes, that's the thesis. I think the other thing too, inflation, right? Like you've got pricing that's going to be up. Even if tariffs are reduced, you still have some level of pricing inflation. Typically in auto parts retail, that's passed on to the consumer because it's a very needs-based kind of inelastic category. What's really attractive about that too is we do have tariffs on new cars that are coming into the US, right? So the bigger trend has been people driving their existing cars for longer, especially with just sticker shock of higher rates and higher lease payments. So if you're driving your car for longer, more wear and tear, you've got to repair that vehicle. The auto parts retailers are really the ones that benefit from that. We like AutoZone a little bit more than O'Reilly just given the valuation discount, and they're also a little bit more opportunity to gain market share on the pro side of the business. But yeah, really attractive area of retail that kind of compounds every year.
In general, for retailers, we've heard this theme over the past year that lower income consumers are suffering more. Has that shown up in your research, or is it part of your thesis on retailers?
Yeah. I think that's the trend. I mean, I've heard people say like the low-income consumer has been in a recession for 2 years, right? Because you've just been dealing with the onslaught of higher inflation, predominantly at the grocery store. So I do think that's been a theme. The other big theme is you've seen a shift towards services the last couple of years. We've kind of come back to goods. Hopefully we don't see hyperinflation from tariffs. The economy is able to avoid a recession. And I think the big thing is what happens with mortgage rates over the back of the year and into 2026, because that's really the unlock for some of these categories within retail that are frozen, right? I cover the home improvement retailers like Home Depot and Lowe's. I cover some of the furnishings retailers. Those categories have been challenged, so you'd like to see some of those markets kind of unfreeze.
Would you have a preference between Home Depot and Lowe's right now?
Good question. Yeah, I mean, we do have a buy rating on Depot. That's our preference. We had our preview out ahead of earnings next week. We like to set up a little bit more into Home Depot. on a medium to longer term perspective, it seems like they've made the investments in terms of investing in stores, doing some acquisition to increase their capabilities to grow with the pro customer. Lowe's is a little bit further behind in our view. They've been more focused on the margin rate aspect of the story. So I think Depot's your better way to be positioned in the home improvement sector. And really, when you think about large cap retail in general, right, if you have a shift into more of the risk on cyclical stuff and away from some of the defensive names, Depot is really a top idea for that.
Thank you very much indeed. And I don't think that Ollie's is north of the border here, but when I'm in Pennsylvania, I'm going to check it out. It sounds like fun. Thank you very much indeed for joining us.
That sounds great. Thank you.
Stephen Zaccone, Director of the Retailing, Broadlines and Hardlines sector at Citi.